Super Microcomputer, SMCI, just found itself under that merciless investor lamp again, the one that makes every number, rumor, and press release look 10 times bigger. The hot ticket line everyone's quoting, SMCI trades at 16.28 times the consensus earnings estimate for the next 12 months, while two big hardware peers sit noticeably cheaper, Dell at 13.12 times and HPE at 10.81 times. That gap is the market's shorthand for, this stock is priced for more growth, or more risk, and it's gotten people talking. What the multiples actually mean, no financial voodoo. Quick primer, a forward price-to-earnings multiple, forward P/E, is how much investors are willing to pay today for each dollar of expected earnings over the next 12 months. If SMCI is at 16.28x and Dell is at 13.12x, investors are, in effect, saying, we expect more growth, or more upside, from SMCI, or we're willing to accept more volatility for that possibility. Imagine two food trucks. One sells gourmet tacos and is always listed on foodie blogs, that's SMCI. The other sells reliable but slightly boring sandwiches and has a steady lunchtime line, that's HPE. Paying more for the taco truck is reasonable if you believe the tacos will soon populate every office building, but pay too much and you risk a foodie fad evaporating. The market is making that bet with SMCI. Broker calls, a crowded room with mixed opinions. Numbers are oddly comforting. According to the brokerage survey that many pros watch, 19 brokerages cover SMCI. Their current split, 7 buys, 9 holds, and 3 sells, with a median price target of $49. Translation, the pros are split, and the middle price they point to is about where half think it's above/half think it's below. That median helps neutral observers gauge where the center of expectation sits. Why the split? Systems and server makers live at the mercy of a few things: enterprise demand cycles, hyperscaler buying, component supply, and, crucially, execution risk, operational, financial controls, manufacturing yields. Some analysts see SMCI's growth runway and want in. Others see margin pressure and macro risk and prefer to wait. The crowd is not yet united. Why SMCI might deserve a richer multiple? Let's give SMCI a friendly defense lawyer moment. Here are real reasons investors might willingly pay 16 times forward earnings. AI and hyperscale demand. SMCI sells high-density servers tuned for AI and data center workloads. If customers spend big on AI infra, vendors like SMCI can grow fast. Product specialization, niche, performance-optimized systems often carry higher margins than commodity boxes. If SMCI keeps winning custom configurations, revenue quality improves. Agility and customization, being able to rapidly tailor systems for cloud providers or enterprise AI projects is worth a premium in some parts of the market. Those are the growth hopes baked into the higher multiple. Think of SMCI as the boutique sneaker brand that's suddenly favored by influencers. Their price tags jump because the demand curve steepens. But boutique brands still need supply chains and good management to actually deliver the shoes on time. By the way, if you are benefiting from the content so far and want more like this, like the video, it means much to me, or hit the subscribe button and comment the word more. Just go ahead and type the word more so I know. Now that you have commented, let's continue. Why Dell and HPE trade cheaper? Dell and HPE are bigger, more diversified, and more mainstream. They operate across servers, storage, services, and software. That broad exposure often means steadier cash flows, but lower potential upside, and thus lower multiples. Put simply, big companies are valued like established hotels, smaller, faster-growing specialists are priced like trendy boutique inns. Investors pay a premium for perceived acceleration and focus, which explains part of SMCI's higher multiple. Broker ratings decoded, what the 7/9/3 split tells us. Brokerage ratings are shorthand opinions, but they're useful when examined as a group. 7 buys, these analysts see upside, they believe SMCI can grow into or justify the multiple. 9 holds, cautious majority, we like parts of it, but the risks mean we'd rather sit tight. 3 sells, contrarian camp, they see valuation, execution, or demand risks that could trim the stock. The median target of $49 gives a midpoint anchor for expectations, not gospel, but a handy barometer. If the stock trades well below $49, the hold crowd might get itchy and upgrades could happen. If it runs above and fundamentals don't keep up, downgrades are the natural consequence. Data like this is the market's thermostat, not the weather. The Trump executive order, what happened and what it covers. This week's policy shocker, President Trump signed an executive order granting tariff exemptions for trading partners that strike certain industrial agreements with the U.S. The exemptions apply to many industrial goods. Reuters and other outlets list categories such as nickel, gold, graphite, and certain chemicals and pharmaceutical inputs. The move is framed as an incentive for aligned partners to cooperate on industrial supply chains and reduce dependence on risky routes. In plain English, the government said, we'll lift or ease tariffs on goods from certain partners if they play ball on industrial cooperation. It's a carrot designed to pull supply chains into friendlier, more secure alignments. How tariff exemptions could help SMCI, the mechanics. So, who benefits? Let's connect the dots in SMCI's favor. Lower component costs. Server systems need metals, specialty parts, and chemicals. If tariffs are eased on items SMCI or its suppliers import, input costs could fall. Lower costs equals firmer margins. Think cheaper oven ingredients for a pizza place. More reliable sourcing. The incentive structure could encourage partners to reroute production through allied suppliers, that improves supply predictability and reduces production hiccups for SMCI's build partners. Fewer supply surprises means steadier delivery schedules to big customers. Onshoring plus incentives. If deals and exemptions make manufacturing inside friendly countries more economical, foundries and contract manufacturers might expand or retool, a long-run positive for companies that need scalable server assembly capacity. SMCI could win if it aligns quickly with those onshore ecosystems. Imagine SMCI as a bakery that imports exotic flours. Tariffs are like a sudden extra tax on the flour. If the government says, we'll waive that tax if you buy from approved partner millers, the bakery saves money, or it can afford to buy more flour and bake more bread. Same principle for servers. Note this as well. Fear God, and give glory to Him, for the hour of His judgment is come, and worship Him that made heaven, and earth, and the sea, and the fountains of waters. And there followed another angel, saying, Babylon is fallen, that great city, because she made all nations drink of the wine of the wrath of her fornication. And the third angel followed them, saying with a loud voice, If any man worship the beast in his image, and receive his mark in his forehead, or in his hand, the same shall drink of the wine of the wrath of God, which is poured out without mixture into the cup of his indignation, and he shall be tormented with fire and brimstone in the presence of the holy angels, and in the presence of the Lamb. And the smoke of their torment ascendeth up for ever and ever, and they have no rest day nor night, who worship the beast and his image, and whosoever receiveth the mark of his name. Here is the patience of the saints, here are they that keep the commandments of God, and the faith of Jesus. Revelation 14 verses 7 to 12. Fear God, and give glory to Him, for the hour of His judgment is come, and worship Him that made heaven, and earth, and the sea, and the fountains of waters. Revelation 14 verse 7. I appeal to you to fear God and obey His law. For His commandments are sure and His word everlasting. Do not be afraid, do not be discouraged. Want more information? Please check the description section. That's the end for now. If you have watched until the end, drop a comment like this, I stayed until the end. Just comment that I stayed until the end. When I see this comment, I will give you a heart. 3 more favors I request from you. First, like this video, subscribe and then turn on the notifications bell. If you do this, You greatly encourage me to continue bringing to you insightful information. Do not miss out on our future videos full of insight. All I am asking is your subscription. Thanks for joining us today. Your support means so much to us. Do not hesitate to share this video to help someone who may benefit. I recommend that you watch the next video, subscribe to the channel and share your thoughts about today's video. Wish you God's blessings and care. Wait, watch and pray. See you in the next video according to God's will.